It's frozen here, boys. There we go. And that sounds means we are now live here on our YouTube channel. I wasn't sure if we were going to actually get there to go live. We've had some problems on Google here today, but we are here live Monday morning, 12/14, 2020. We've got the crew here from tackletrading.com. We've got Coach Tim here hosting and running screens here during the halftime report here today. We're going to be going through some charts, and I've got Matt on the back end doing analysis, Mark on the back end doing analysis as well. Matty, how are you doing today, sir?
Tim, doing absolutely fantastic. Excited to be here with the crew to break down some market activity here today. And there is quite a bit of it: stimulus, FOMC, vaccine rollout, a lot of news that has been ongoing for quite some time. It's just continuation there. And then, some interesting stuff happening in that very hot IPO market with some downgrades in Airbnb, a downgrade in Dash, Disney kind of downgrade today, McDonald's an upgrade, and then a slew of merger and acquisition activity. A lot happening in the market here today, and it's with the merger activity we've had recently, the ridiculously hot yet cooling IPO market here today. It's almost like this market's a little bullish.
Market is a little bit bullish. Yeah, I definitely am still on that side of it myself and seeing it that way. We're going to break down all that. There is a slew. Is that the word of the day, by the way? Slew. I like that.
Are we going
slew?
Slew. Going slew.
It's a weird one. I like it though. I kind of like it. Slew of information we're going to get through here as we break down the information and the action on the charts. Marky, how are you, sir?
Listen, I mean, my account, I'm happy. Like, you come after a weekend, market even, it doesn't have to be up a lot. Theta, 3 days off, things are good. I'm very, very happy.
Happy. So you're finally happy making money, not complaining about it. That puts me in a good mood. So
well, because I got lots of other stuff. Like, not everything's up. I got other stuff that's down, and so it's great. It's the perfect storm for me right now.
Tim, you know what's going on right now. We know Mark's personalities well enough. He added exposure to Bitcoin today. It's millennial Mark you're dealing with right now. So
listen, Riot's up 9%, Mara's up 17%. Like, listen, life is good.
Yeah, and Bitcoin obviously coming in with a nice Monday morning. We'll talk a little bit about that. There was a note out of JP Morgan through their analyst that we thought was interesting. We'll analyze that here in just a bit. And the technicals are actually shaping up quite nicely. Matt, you mentioned a bunch of stuff that we do want to discuss and get to here in a minute. By the way, if you're joining our show right now for the very first time, we do this show each and every day. The markets go live, 12:30 p.m. Eastern. We go live as well. Click subscribe, click the bell, come back and join us. We got Cody on the back end producing, and Tanya, young Tanyan, is now hosting these shows, and he's also doing production on our back end. Always appreciate you guys. If you're a veteran of our community, hashtag Team Tackle in the chat. Come in, engage each other. Positivity. Remember, the number one rule of tackle trading is always positivity. Let's focus on understanding the markets, have a great conversation, and let's make it a great show. Let's start here, guys, with the vaccine rollout. Obviously, we've been talking about vaccines since Pfizer Monday. Literally been talking about vaccines all year long after the pandemic and the lockdown hit. Matt, this Pfizer vaccine in conjunction with BioNTech, they've been getting their FDA approvals in place the last little bit. They're starting to move this. In fact, I believe somebody's already taken this vaccine. They're moving 3 million doses, I believe, this week. They want to get a lot of that done. 145 sites are going to have this vaccine for emergency workers, frontline workers. They're going to be the first ones to get it. Maddie, what's your read on the vaccine development here? I mean, this is obviously really big for humanity in that expectation, but what's your read on it from a market perspective?
Yeah, the FDA approved it on Friday night, and they started rolling it out over the weekend, and they're continuing to do that throughout the end of the year to the frontline workers. And honestly, I know the news is all over in the market today, but the market's been pretty comfortable with this vaccine news for about 6 months now. So I see this more as just a continuation. Quite frankly, I think the market's already moving on to other things other than the vaccine. I feel like the market has been preparing for that vaccine literally since June for next April. And yeah, like I said last week and the week before and the week before that, I think you got to give Operation Warp Speed. And I think you got to give the Trump administration a lot of credit for putting pressure on the pharmaceutical companies to get this vaccine done. And quite frankly, with the typical vaccine taken, through everything, and obviously we put the entire world, research and development on this year. But I mean, to have a vaccine literally within a year of going through what we have went through in the past year, it's amazing. It truly is. And I think humanity should celebrate a little bit, but from a market perspective, oh man, this old hat.
Yeah, I agree with that. And the thing about it is, doesn't mean that it's not currently in the theme. It can still be old hat and still keep the theme in place, as we're moving forward in this slight bullish nature. Mark, obviously, this has been big news over the weekend. I'm sure it's on all the fronts. What's your read on this vaccine development, the way that we're rolling out? We're now starting to actually see it, Mark. I mean, it's actually happening now. So,
no, I mean, it's a reality. And like, I mean, right now I'm looking at the S&P not up a whole lot right now, like compared to what you might have thought, like if you'd got that initial news that it was going to come out. I mean, we've been talking about it being priced in. I think it's just being priced in as a reality now. And the market will now turn to other areas to see what the next thing is to focus on.
Matt, what are you watching for in the charts on the broad market? I mean, we're looking at the S&P 500 here, and obviously we've slowed some of the momentum down. You've detailed that quite a bit. From the beginning of November, when we had that blast off, we had a huge run, and then obviously now this last pivot run was sustained and very bullish in that regard. I mean, we went from 3,600 to 3,714 before we've had this little flag developing, but that's less momentum. I mean, what is your read on this market from a technical perspective?
Well, you are seeing a little bit of slowing momentum in the S&P chart. There's no doubt about that from a trend perspective. Now, slowing momentum in trend is not an indication of bearish momentum. It's an indication of slowing bullish momentum, which is not abnormal when you start to get a little bit overextended from a theme perspective, from a technical perspective, or from a fundamental perspective. And so slowing momentum is fairly normal. Now, when you're looking at the S&P, you got this as a bullish flag pattern, similar to what you're looking at in the NASDAQ. You're fighting for that support level right there on the 20-day. It came into the zone of the rising 20 and the rising 9. And now you're looking at that as potential confirmation. Looking at it on the NASDAQ chart, if you'll switch to the NQ contract very quickly, you see a fairly similar pattern. The difference, though, is on the NASDAQ, you actually have increasing trend momentum versus decreasing trend momentum on the S&P. On the NASDAQ, you have a cleaner support. You have a cleaner support bounce off the 20-day moving average.
Well, and if you look at the runs, by the way, on the increasing momentum part, if you look at the runs, it's clear in those pivots. We did pick up a little bit on momentum on the NQ. Yeah,
you did. You picked up a little bit of momentum, but it's fairly similar. It depends on where you want to actually take those runs. I would have drawn it a little bit differently. Yeah, I would have drawn that run post election, because the first run you drew, I wouldn't consider that an actual pivot.
This one right
I would
here.
I would consider that. And so you do still have a little bit of increasing momentum, but the thing on the NASDAQ that you're looking at is not only do you have increasing trend momentum, look at the quality of the pivot point over the last couple of days. And then today, what you're looking at is you're looking at a little bit of relative strength with confirmation, where the S&P is kind of fading down a little bit. And some of that is due to some of the downgrades that the S&P had to deal with here today. But the reality is you are seeing a little bit of a pickup in the NASDAQ. And this is something we've talked about over the last couple of weeks, initially with that, post-election analysis, with the economy reopening up theme, the pandemic theme, the stimulus theme, all kind of leading to that, economy reopening up play. And I've long held the belief ever since the election that this was something that was a little different than, the swing trading themes that we were all annoyed with in 2020, more of a traditional sector rotation from non-cyclical into cyclical, you know, and the reason I feel it's different is the themes that we were playing out in 2020 versus what we're seeing today is we weren't seeing non-cyclical to cyclical back to non-cyclical. We weren't seeing traditional rotation. You were seeing micro rotations in theme base that would impact an industry within a sector, not the entire sector. Does that make sense? And so it felt more like we were rotating industries, which is abnormal, when really what we traditionally do is do a little bit more from a sector rotation perspective. And so post-election, I think you're seeing a little bit more traditional sector rotation than what we've seen in recent history. And that's why I think you've seen a little bit more of a consistent bullish theme that the majority of the market is participating in, and not just a subculture of the market. When you look at what's happening right now in the current run-up, the percentage of the S&P 500 companies that are participating in this run is vastly different than what we saw in those early stages of market euphoria, when you're talking about, you know, post-pandemic, that initial surge, and then when you had that secondary surge of stimulus-based theme in July through August. Those were industry based, and that's why we were like, okay, you have this one area of the market, you have this one area of the market, we're looking at hotels and airlines, not, and think about that for a second. We're talking about looking specifically at airlines, specifically at hotels, specifically at cruise lines, specifically at these certain industries. Whereas now what we're talking about is not a specific industry in rotation, but we're talking about the entire industrial type movement, which would take into account your traditional industrial plays like Deere and Caterpillar and 3M and Honeywell versus your airlines, your cruise lines. So you're not playing this, well, it's this area of industrial versus this area of industrial. Now it's, okay, the industrial sector in general. And so that's why I feel like we're getting back to more traditional rotation that can be a little bit more long-standing, and we are removing ourselves a little bit from the random nature of volatility that 2020 did represent.
You know, it's a really interesting take. And I got to tell you, I mean, as we flash through the sectors, and we always talk sectors on a Monday morning, you know, you're talking industrials here. I'm really excited about that $90 breakout, by the way. I think that would be very, very clean. I'm all over it. I'm ready for it. And part of that, Matt, is my weekly prep on a Monday morning. I go through and I start to look at those sectors, those industries, those areas of the market that are getting primed, getting ready, getting prepared for a move. Mark, any thoughts on Matt's topic here with rotation in general, what we're seeing and the areas we're going to be focusing on?
No, not really. I mean, I love right now, this market is absolutely built for true diversification run up. I mean, just to talk about a couple areas, I mean, will you pull up Mosaic for me?
Sure.
Because you have rotation, but it's affecting different areas. Like it's just a great market, and I'm trying to find a way to adequately describe this. Like, you have different areas of the market. For example, Mosaic agriculture, chemicals hitting a 52-week high today. Nice little pattern breakout of that. Does have grandmama up ahead, but I do love Mosaic on its phosphate cells. Like, listen, if you have a little bit of tech and a little bit of reopening and a little bit of rotation, I mean, this is just a really great market right now for somebody that has a diversified portfolio that's willing to put a little bit here, a little bit there, so that they're not, it's just a great market right now.
You know, this Mosaic chart is very interesting. Obviously, a little bit of a rotation, a little breakout, and we are seeing strength in different areas of the market. What we'll do a little bit later is we'll go through all the sectors, take a look at them, and maybe have a conversation about that sectors, which ones we upgraded, which ones we downgraded, what we're watching for, all that kind of stuff. Back on the broad market here for just a few minutes while we just kind of round this out and talk about it. One thing I always like to do is flash you all the different indexes. I'm seeing the S&P 500, Matt, you know, holding the moving averages, looking at a potential breakout here. You talked about the NASDAQ with its relative one-day strength and also kind of in momentum and trend as well. But really the juggernaut, and we'll take a peek at the Dow real quick, kind of getting ready for that industrial breakout almost, very similar pattern in that regard. But the real strength has been in the Russell 2000 here, guys, and it's not really slowing down in that expectation. Matt, momentum, trend, the whole thing. You look at the long-term charts. Would you have the Russell ranked one here, Matt?
I think you have to have the Russell 2000 ranked number one. It's the one area of the market that has showed the most consistency. It's the one area of the market that has showed that really fits kind of this theme that is developed in the market. I mean, guys, I know we've been in pandemic mode the last year, but you got to realize the Russell 2000 was in a nasty situation before the pandemic, and the Russell 2000 was one of those areas of the market that was underperforming the broader market really since 2018, not since 2020. And the Russell 2000 traditionally has been a leader in the market, and so when you're seeing the Russell 2000 pick up trend momentum here, and it certainly has, your philosophy to the market has to be a little bit more bullish, even in the face of everything that's happening right now. When the Russell 2000 is leading either on a bullish side or on the bearish side, that does give you a little bit more bias to the broader market, S&P and the NASDAQ and the blue chips out there in the market as well. So, the Russell 2000, I mean, until that Russell 2000 violates the 9 EMA, I don't think anybody in this market should be thinking about anything besides buying things.
And by the way, the rut being this 1A strong performance kind of reaffirms what you were talking about a few minutes ago, Matt. The different industries that are a part of the rut. There's a lot of those industries that are in the rut market.
We're talking 2,000 stocks there. I mean, the S&P 500 is the barometer for the market. Full stop. The S&P is the barometer. You look at the NASDAQ for that growth area of the market. You look at the Dow Jones for that traditional cyclical, economy reopening up, traditional industrial plays. The small and the mid cap index is that leader. So when you see these stocks, these $2 billion, $3 billion, $5 billion companies start driving the marketplace, people got to wake up and pay attention to that, because it is a leader in the market. And right now you are seeing a little bit of relative weakness from a daily perspective. You had a very good positive futures market open last night with the vaccine news that happened after the market closed on Friday. So that vaccine, the vaccine news was obviously the FDA approval that Pfizer and I think it was Bio got on Friday night. And so you had that positive momentum coming into the futures market on Sunday evening. It was really kind of through those European hours, and there wasn't a lot that happened in Europe today, other than we realized for the upteenth time that these fake arbitrary deadlines politicians put in place are not real deadlines. And did we finally, can we finally put to bed Brexit?
Dude, it's 2016. Please, can we just stop? Can we just stop talking about Brexit? I'm done with it.
That's fine, and I agree with you 100%. You understood how, when the news came out last week, what did I say literally in the halftime report?
Okay, so what?
Who cares? So some politician in London gave an arbitrary deadline on a Saturday. It came, they didn't have a deal, and then now they're working towards a deadline in January. Tim, is this the 150th arbitrary deadline?
It's to the point where it's just humorous.
We're triple digits close. I mean, it's got to be close. But think about that the next time you hear somebody in America scream bloody murder that politicians didn't get a deal done before a deadline, because remember, political deadlines are all make-believe fairy dust that have nothing to do with anything. They are arbitrary in nature. And so when you look at what's happening, from an overnight action, you had some news come out for Brexit. Little bit of drive down in price here today. Cash open was a little bit mixed, but if you think about this from Friday's close to today, nothing really has transpired so far.
Yeah, no, basically we had a little pop up like you talked about. We've been back and forth. We're very similar to that regard. Go
Well,
ahead.
and quite frankly, when we take a look at the sectors specifically, take a look at basic materials,
Let's go through those
right?
sectors.
Yeah,
Yeah.
let's take a look at them very quickly. When you're looking at basic materials right now, you're looking at it. Yeah, a little bit of a down day, but has it broken the trend? Has it broken the pattern? Has it violated the trigger you're looking at?
No, just consolidating.
So just consolidating, still
Mhm.
preparing for the breakout. Twin sister energy here, seeing a little bit of relative weakness here today with energy. And obviously crude oil had a little bit of news with OPEC and their monthly report coming out. I'm sure Mark will take a look at that. Oil's just fighting for some resistance breakouts. That's what it's fighting for. Hit its head on resistance, drive down, and what's kissing off of today? The 9 EMA. So today in energy, you're looking at energy and you're like, oh man, kind of big down day. And it is a big down day. Those days happen after you're up 45% in a very, very short time frame. So,
Yeah.
there's nothing really transpiring in today that's violating trends or patterns. And so it's just one of those days where you're basically you're going through your watch list and you're saying, okay, if I see a trade, I'm taking the trade. Right? If I see
Mhm.
a trade, I'm taking the trade. When you're looking at some of the other aggressive sectors out there, let's take a quick peek at communications very quickly. Communications, we ranked communications right there at that 20-yard marker, positive, right on the +1, +2 bullish barrier. Did not upgrade it. We loved the bounce we had last Thursday. Loved the continuation we had on Friday, but you're so tight up against that resistance channel breakout that you really kind of got to see that breakout occur before you really take anything aggressive there in the communication space. And then when you take a quick peek at some of the stocks, Google had that breakout of 1800 that was really, really legit, still fighting for that again. So you're really seeing it hesitate right there again at that 1800 number. Disney here today, another very, very, very hot stock in this sector specifically. And we talked about Disney quite a bit on Friday after they had their 4-hour Disney digital day on Thursday, making all the announcements that they made on the increase in price on Disney subscription services. The intention of how they're going to drive Disney Plus to get to that 240, 250 million subscribers by 2024 to where they are, finally that profitability, not for Disney specifically, but for that division, which means so much to the future of Disney. And so Disney has had a massive run up, but you're not exactly looking at Disney right now and you're saying, you know what? I think Disney's going to help communications this week. And the reason I say that is you got to be looking at Disney saying completely overextended, should potentially come down in price, and a kind of nice little fat downgrade here today as well on Disney, and that's what it's coming down a little bit. Not too big of a deal. Just thought that literally, let me read you what the dude said. UBS upgraded McDonald's, not McDonald's, but BMO. BMO Capital Markets downgrade the media giant Disney to market perform from outperform. So what that means is they don't see Disney, and this is just BMO talking. This isn't you or me or Tackle or anybody else. It's just BMO talking. But BMO's talking, and they're saying, we don't expect Disney to continue to outperform the market like it has in recent history. We're going to downgrade it to market perform. That doesn't mean they think the run in Disney's over. They just think the expansion that Disney's had in a relatively short time frame, that level of expansion is over. And it's very similar to what I said a few weeks ago on the NASDAQ. I said, when you look at energy, finance, basic materials, you can't expect them to continue to maintain that momentum for perpetuity. You have to look at that as an initial surge with the trend continuing, but that level of momentum is going to shift. You can say the same thing for Disney. And so when you're looking at communications, Google fighting that 1800 breakout, Disney a little bit overextended, looking for a little bit of profit taking in that capacity. Shouldn't be a little surprising to see communications fight for that potential breakout. Industrials, Tim, you mentioned that industrial play, the one right there south of $90. down on today, up on the futures, little bit of a doji if you actually look at it without the overnight action. You're still looking at that $90 breakout on industrials, and you're saying, you know what, I like that $90 breakout. And you know what I like? I like Caterpillar here. I like Honeywell. I like Honeywell here. I like the leaders of this area of the market that front run the breakout in industrials. And if the industrials do break out, you got to be looking at Honeywell. You got to be looking at Caterpillar specifically as well. Continuing to lead that charge, but because it has been leading in recent history. And so you're looking at industrials and you're saying, you know what, I like Honeywell, I like Caterpillar here, I like the strength of the market. If we can get that breakout, these things should fly a little bit. So you're looking at industrials saying, I'm a little hesitant. I still like the Honeywell and Caterpillar trade, but let's get that breakout so we can get a little lump going in. Technology, we looked at the NASDAQ earlier today. You got that as a bull flag pattern with confirmation here today. You're absolutely looking at the tech space this week for potential breakouts or flag-based patterns. A couple very quickly, discretionary, very similar to industrials, Tim. When you're looking at the $90 breakout on industrials, you're looking at discretionary here. You're looking at a very, very similar consolidation, top end of the channel, right north of 159, call it 159.16 if you care about that wick, but you're looking at that as a breakout. So there's not a lot happening in the market right now, but there's a lot happening in preparation for these potential breakouts. And if we do get those breakouts, you're going to see a really, really good market this week, in my opinion. But outside of that, we're just looking at consolidation right now. Even in consolidation, stock pickers market this week.
Mm-hmm. Well, and obviously, and then the areas of those sectors that just kind of are not interesting right now, utilities, real estate, staples, and healthcare, they're kind of stuck in a range. The ones we've talked about, they're much more, in my opinion, they're ready to break out and run. That's where the rankings in our weekly newsletter are reflecting that as well. They just need this like little bit of juice, guys. I mean, if you think about it, this market is looking for a catalyst and something to happen to maybe create this spark that can get another one of these runs moving. That may be stimulus. And we don't know that, but there's a lot of speculation around the stimulus front. As we're talking sectors here, Matt, we're talking about the broad markets and thinking about that. The other major conversation is happening with stimulus. And there's the rumors that the bipartisan group of lawmakers are pushing that $908 billion pandemic relief bill. There's been some discussion around taking, I believe it was Matt, $160 billion off of the state and local aid so that they could, kind of trim the bill down if they need to. Matt, what is the latest on stimulus that you're reading? And do you think something is potentially going to happen here this week? And Maddie's on mute. Let's bring Mark in.
Hey, Tim, give me 10 seconds. I'll be right back on.
I'll get Mark first. Marky, what about you? Stimulus conversation. What are the latest?
It does seem like, unlike the dog and pony show that we had pre-election, where we're making progress and we mocked it, right? Like it was just all a dog and pony show. It seems like this one does have both sides wanting to get something done. Now negotiations can go a lot of different ways, but it does seem like the intent is sincere. It does seem like they're having real negotiations.
Mm-hmm.
I think, and I don't know if a stimulus bill can be that catalyst that sends the market upwards and onwards. You probably have an up day when the bill is announced. But the market is looking for a theme. It's looking for a reason. You have a lot of support levels providing a nice cash flow environment. This is what we talked about in the weekend prep class last night. And we don't have a real bearish theme, but we don't have a real bullish theme either right now. And I think the market really, really, really wants one. Really wants one. So, I mean, obviously, we're always on the lookout for that. We're always on the lookout for that. So,
I honestly, guys, I think people are going to be slow to waking up to those themes developing like they did in 2020, though, guys. When I'm talking about this getting back to more traditional, you're not going to see rotation themes that will spark the market for a week and a half period of market euphoria where everything is up. I have this market getting back to some
just like slow grind.
Just a typical market, like literally just that's how I'm approaching the market right now. So I and nothing's going to happen like in the immediate future, but let me put it like this. With that stimulus theme that's been discussing, I don't think that sends the market up 10%. I just don't.
Yeah, I don't either.
I just don't think we have, if we get a stimulus deal, say on Friday, I don't think the last 2 weeks of the market are going to see a ridiculously market euphoric where everything is up all the way through Christmas. I think the market's going to be like, yeah, okay, this is what we thought we would, right? When you're looking at that stimulus negotiations right now, the only thing that can stop that, in my opinion, is McConnell. And nobody knows what the true intentions of Mitch McConnell are. So I don't want to, speculate on that. But we can just go back on what McConnell has said in the past. McConnell has said he wanted a targeted bill, correct?
Correct.
That is the number one thing he wanted, was a targeted bill, correct?
Correct.
Well, these bipartisan legislators, the Gang of Eight, these bipartisan legislators, 4 Democrats, 4 Republicans, are talking about removing state and local government funding. They're talking about removing corporate liabilities. And when you think about those two issues, do Republicans and Democrats disagree that we should do something for people right now?
No.
No, they all want to get something.
It's just a matter of, is it $300 or $600,
yeah.
right? Okay. Do our politicians disagree on something for small business in the expansion of PPP loans?
No.
I haven't heard that as a sticking point.
Okay. So in this bill, the only sticking points are state and local government funding, which is what a Democrat wish list, and Republicans do not want to touch because they do not want to send money to California and New York. What do the Republicans want?
They want liability protection.
They want liability protection, right? And what do the Democrats want? They don't want to give corporate liability protection because they're like, we give corporations everything. Okay. So those are the two sticking points that could stop this deal. Well, the Gang of Eight has talked about removing those from the deal to get this deal done. And so what could McConnell stop it on? McConnell's losing arguments here.
Yeah, I mean, obviously,
okay,
if he
now,
wanted to stick over the liability protection thing, he might throw a fit about that and say, I don't want to do that. We're not moving this bill forward. But it sounds like this is a bipartisan kind of conclusion they're pushing towards with a smaller, trimmed down bill. I don't know. I don't know, Matt. I don't know how he's going to react to it.
The reality is, the only way McConnell can stop this deal, but the only way he stops is literally just not putting it up for a vote, which he has done many, many, many times. But is he really going to do that when there is wide bipartisan support here? I don't know.
See,
I think a deal gets done. I do think it's a slimmer down version than the $908 billion when you're talking about potentially removing state and local government funding. When you're talking about removing some of these things, you're probably talking somewhere in the $700 billion range. But again, the way I'm approaching this is these will be micro-targeted bills that we will have multiple of these. So I don't believe a stimulus deal would be that catalyst that Mark and other individuals in the market are seeking, because I think you're going to be seeking that for a long time, and it's not going to come. I believe we're getting back to more of a traditional market with traditional sector rotation, which is a slow, methodical grind in the market with traditional technical patterns. And quite frankly, sign me up for that. I miss traditional normal market mechanics, and maybe I'm projecting a little bit, but this is also what I'm seeing in the data right now.
Mark, any final thoughts on that front?
No, listen, if we get back, listen, we never get to choose the market we have. All we can do is recognize what's in front of us, and you can make money in any market. It's just recognizing what it is. And if we get a traditional market, that means there's actually downtrends in certain stocks other than everything being above its 200-day moving average, which can provide both people that like to have a few bearish trades opportunity, bottom feeders like myself opportunities on companies that they don't think should be going down, and riding the trend of the things that are strong. That would be amazing for traders.
Let's flash through commodities here, guys, and kind of keep the conversation going if we can. And Matt, you mentioned crude oil earlier. Mark, there was some news around crude oil, I believe, with OPEC over the weekend. It actually is trying to battle itself here, holding that 90 EMA currently, and actually around the unchanged mark at this point. Mark, what's the latest on crude oil?
OPEC, in its monthly oil market report, cut its forecast for first quarter 2021 demand by 1 million barrels per day. And it's something that, like, we didn't need their report to know the demand's soft, right? Until you get a true reopening of the economy. It's why in the different areas of the market, I'm just not as bullish on oil as other areas in the general reopening theme. Because we got lockdowns weighing on us in London right now. There's worries about a New York City lockdown. I mean, those things might not necessarily send the market or certain areas down, but they do kind of provide an anchor weighing on those areas, and definitely on oil itself. As long as those exist, there's this anchor that can contain it and will, by just practical matters, contain demand. If things are locked down, people aren't driving, people aren't flying, people aren't going around. There's less oil demand. The OPEC's monthly report indicated that.
Well, and I get the concern, but I got to tell you, I mean, I still see the chart development is definitely very, very positive, and this is still in play, in my opinion, for a $50 target. Maddie, how are you reading crude oil right now?
It's a nightmare.
Yeah.
That's all I got to say.
It's been a nightmare this year. That's no doubt. But it's starting to act a little bit more well-behaved.
Like crude oil is going to $50. Like, who's doubting that at this point? Like, just good luck being successful trading it. Like, it's just a tough beast. It's a volatile beast right now. So you like the consistency on the 9 EMA. You got to love the consistency on the 9 EMA. There's no doubt about that. Just today reminds me of why I haven't traded crude in recent history and why I've been a little hesitant. The news today, I feel like crude should have been at $50, quite frankly, because the news today, to me anyways, and I know there's some OPEC news here today, but you had some geopolitical issues, situations with one of the Saudi Arabian oil tankers got bombed over the weekend. So you had some bullish catalysts happening on crude, and with Brent crude consolidating above $50 for the first time in quite some time, you got to think crude price appreciation on crude is not only likely, but $50 crude should, like, nobody's going to be surprised if it hits $50. It's just difficult. Look at the volatility of today. Even though it's consistent on the 9, stop loss placement on crude oil is a nightmare.
It felt like today should have been a bigger day for oil, right?
I guess that's what, and maybe Mark, that's where my like this is just crazy, because the oil should be up bigger.
It felt like it should have been a bigger day, and it wasn't.
I mean, when's the last time we got oil tanker bombed in the oil market? Oh man.
I still see it
for some reason, Tim. For some reason there for a split second, I was like, I remember back in the day when I was a young trader trading crude oil and waking up at 3 a.m. waiting for the next oil tanker to get bombed.
It has that wild geopolitical risk to it. Obviously, it's one of the reasons why when I did start trading, you're going to get nostalgic for me here for a second, but it's one of the reasons why I was so interested in crude oil as one of the very first products I started watching, because it is tied to the global economy and all the things that can happen. I get it. It should have had a much bigger day, but I got to look at this and say, hey, at least we're holding the 9. We're holding the breakout channel. Yes, it's going to be very, very difficult on a day-by-day basis, but that's crude oil. I think anybody getting involved with crude oil has got to know that for certain. Let's keep picking through the commodities if we can here, Matt. Let's talk gold next, and let's take a peek at this chart. Fed meeting on Wednesday, by the way. We'll talk about that right now as we discuss gold and the dollar. Matt, what's your read on gold, and what are you watching for this week?
This week, obviously, you got the central bank. The FOMC is making their monetary policy statement on Wednesday. And, the Fed has been fairly silent in recent history. This is the last meeting for the year. And typically, we do see some activity around this one. If you guys remember the famous 2018 what was it? One day we were thinking about raising rates. Did we think about raising rates at one point? Like, or is that just a dream I had
Is
one
that a
time?
dream?
Like,
Yes, in
uh,
2018,
I'm
Jerome
not
Powell discussed it, I believe.
okay,
Yep.
but did he like just like say it one time?
They've never had an aggressive rate raising
Okay, I
policy.
just wanted to make sure, because if you remember, the market went down 20% on the thing, on the thought that they might think about hypothetically raising rates at some point in the next 5 years. And then that obviously changed. So, you know, we've had some fireworks around this last FOMC meeting of the year, but I don't think a lot of people expect anything here this week, especially with the government's still negotiating fiscal stimulus. And anybody that's been around the Fed, you're probably as bored as I am in recent history of anything the Fed has said, because since the government is in negotiations on a $908 billion fiscal stimulus bill this week, I think the central bank is going to use that as a way of just ripping on politicians to get another stimulus deal done and not actually do something themselves. And so I think they're going to punt this week, Tim, but we'll see on Wednesday. So obviously FOMC events are going to have a big impact on stocks. They're going to have a big impact on specifically on the dollar. And you know, because the dollar is so important to everything that happens in the gold market, we're obviously going to be looking at that FOMC event this week to see any surprises coming out of the central bank. But regarding the dollar, Tim, and gold, when you're talking about the precious metal market, you know, and I've said this for about a week now, when you're talking about that precious metal market, as we've been battling that 200-day moving average within the gold market, is I don't think gold's the chart you actually look at, quite frankly. I think it's the dollar chart. And right now, you know, think about this for a second, Tim. Last week we had negative Brexit news, right? And the dollar really didn't really do anything. Today we had positive Brexit news and the dollar's coming down. So I think you're really looking at that dollar right now and you're saying, okay, 24.40. We've talked about this level. Team Tackle knows about this level right there at 24.40. When you take a look at the UUP ETF that tracks the dollar, if you don't mind there for a second, Tim, if you look at that 24.40 level, look at it on an hourly chart, and you'll see why I've talked about 24.40 so much. Look at the double bottom from a week and a half ago. It was subtle, but you had that double bottom, which clearly identified that now as a support level. Look at the gap down here today. Where did the gap down literally come into today? The low of today was 24.40. It got gobbled right back up at 24.40, and you're forming a little bit of a bear flag on that intraday chart. So when you're looking at gold, I think, and I've said this for a while now in the halftime report, you're going to get some misreads on that gold chart. What you need to do is you need to look at the dollar. And when the dollar confirms under 24.40, the aggressive trader looks at gold in that capacity. The aggressive trader looks at shorting currency, i.e. the dollar, in that capacity. So when you're looking at that 24.40 level on the dollar specifically, I think that is such an important level, both from an intraday perspective, swing trading perspective, and short-term trend analysis. But if you look at it even on a broader time frame here, Tim, you look at that 24.40 level, there's not a lot underneath that till you get into the 24 handle. And so a violation of 24.40 easily sees the dollar down at 24, which would allow currencies to price appreciate and the dollar and gold itself to go up in that capacity as well. So when you're looking at a bearish breakdown on the dollar, and it can consolidate for a little bit more time frame, I don't think anybody should be surprised to see a break literally tomorrow or a break a week from now. And quite frankly, I think if it consolidated another week, that would be actually better for that potential breakdown. The same thing we're looking at Bitcoin. So when you're looking at that dollar breakdown, you're thinking, how do I take advantage of that dollar breakdown. Well, what areas of the market have some divergence against the dollar? Well, obviously stocks appreciate when the dollar goes down. A decreasing dollar is good for stocks. That's number one. Number two, when you look at your precious metals out there, let's take a quick peek at those precious metals. Now, specifically, the number one that is inverted against the dollar, obviously, is your gold chart. We've talked about that quite a bit. When you're looking at your other metals out there, though, let's take a quick peek at silver, the twin sister to all things gold. Silver specifically has shown relative strength against gold, and not just, I'm not talking today or this week. I'm talking over the course of the last 2-3 months. And just visually, gold's at the 200-day, silver's above the 200-day. Gold's fighting for that 200-day, silver's fighting for a double bottom at 22. And what's interesting on this chart, and I talked to Pete about this last week, so if you guys didn't catch that pod from last week, still download that. Pete's analysis is very, very good, not just for that week, but long term as well. I like it. Pete likes it. Pete likes silver. He thinks silver is going to outperform. But from a technical perspective, you see the dollar break. I'm still looking at 26 on silver. And so nothing has really changed in the short term on silver. Gold, you're looking at dip mechanics at the 200-day moving average with the dollar violating support. Silver, you're looking at the consolidation. You're looking at the relative strength on silver, and you're saying, I love silver, but I love it a lot above 26. And so you're still looking at silver above 26. When you're looking at, palladium has been, just stuck in a rut for quite some time period. Dollar violates support. I still don't see palladium being the beneficiary here. The dollar's violated support multiple times. Palladium's kind of held up its head above water a little bit. But platinum specifically is starting to show some life here, and I want to spend some time on this technical pattern just because I think there's a quality technical setup here. First and foremost, you got to love the momentum that's happening in the platinum market. Really, since the post-election analysis, this thing has been very consistent, very similar to the Russell 2000, quite frankly, riding that 9 EMA. It's consolidated over the last 4 days, and that 9 EMA is now, it's not acting as so much support because you're really looking at this as consolidation over the last 4 days. But where is it coming into? Right north of that $1,000 barrier. And that $1,000 barrier is one of those significant whole numbers that people just geek out about. But if you take a look at the long-term charts on platinum, you can start to see a little bit of what I'm starting to get excited about with platinum. And platinum has been a dog, I mean, against silver, against gold, against palladium. It's been one of those dogs that just didn't shine in this run up. But you're now starting to see things happening in the platinum market that have not been transpiring for literally this entire market cycle. When you're talking about gold in the last 10 years, it's recovered its price. When you're talking about silver, it hasn't recovered its price, but it's done a lot better than platinum. When you're looking at palladium, one of the best performing metals over the last 10 years is palladium. Oh, fantastic, on fire for the last 5 years. Platinum, kind of hanging out, nobody cares about. But that little ninja snuck up upon us, and now we're looking at it as a potential reversal candidate long term. It's fighting for that $1,000 in the short term. I think you got to keep platinum on that watch list, and I think you got to get a little excited with some weekly confirmation above that 1060 level. You break out at 1050, 1060, you should see some price appreciation. So platinum's been a boring little beast. It is starting to pick up some lifeblood. And Tim, how many times have we heard, oh man, the market's too high, too high, too high. Let's look at some bottom up mechanics. Well, here is a bottom up mechanic for you right here. It's been consolidating for years. We're finally starting to see some lifeblood. Not a lot of people are participating in this right now. If platinum can start to see a little bit of social, what's that word? When we need to create a
buy-in,
yeah, I know, but we need to create a word in for like consumers, because for 20 years, guys, we haven't cared one iota about what consumers did. But now, for shockingly, I do. Like, you got to take into account what Robinhood does. So we need to create like a word for that social buy-in. Because it hasn't
acceptance, social adoption, early adoption.
No,
So
I don't.
like
I don't want to give it a legitimate name.
All right, I got you.
You know where I'm going with this?
Yeah, I do. I do.
Like the easy one is the social conscious. I get that one.
Yeah.
I don't want to give it social conscious. I don't want to give it the name because the name gives it more credence than it deserves.
Oh, we need to find a name for mass adoption by the millennials, Mark, that are smashing buy buttons. Yeah.
How can we get Palladium to get that millennial love, Mark?
Yeah.
Listen,
that's the word, the millennial love.
We need some love. Yep, we need some millennial love.
We need some platinum love. How do we get the millennial love?
How do you make platinum attractive? Well, you talk about the breakout potentially, I guess. You go through the technicals. That's going to make it real sexy pretty fast.
Well,
anybody who can read a chart.
We know millennial love loves to chase, right?
Yep. Oh yeah.
Like they don't do the old school throw it out there, let it come back. They love to chase.
They love to chase.
They love to chase, right?
I'm not sure I want the millennials on board. Sorry, millennials. Yeah,
I wouldn't want the millennials on board with silver above 26, but like give them a little bit of ump on the bottom up here.
Yeah, no, I'm with you.
Well, listen, I hate to inform you, but Robinhood is a little bit already on this train. Go to PLG. This is not an entry to say the least, but to show you that there's some, there's all the platinum.
I changed mine. I hate these people.
If you're
because Matt, they're not going to play platinum. They're going to find some PL. They're going to find some.
If you're looking for something to play platinum, and once again, I would advocate a cost average down plan. This ETF does not have options.
How in the world have we not created a SPAC company at this point and just created like a fund that buys all things crypto or metals and just say they're tied to crypto and metals? My God.
Like, go to PLTM.
I'm in the wrong business.
Not a lot of people are going to want to purchase platinum future contracts, right? But there's a couple of ETFs that follow the price of platinum, like your gold ETFs, like your silver ETFs. PLTM was one. The one bad thing about these platinum ETFs is that there is no option availability, which I hate.
Yeah.
But they do give you exposure, especially if you know how to cost average down on the group. Another one is more expensive, but same as PPLT. So just a couple things for y'all to research if you're interested on a signal and trading or whatever platinum. Couple ideas on ETFs. Now they don't have options, which I hate, or I'd already be involved. But those are a couple ETFs to get exposure.
And I am just going to throw out my little warning, and y'all can listen to it or y'all can just bypass it. Don't invest in things that don't have options.
Yeah, I mean that's one of the problems, and I've been trying to find creative, like options.
That's why we need to teach millennials future so they don't have to buy this trash.
So, yeah,
we're getting a couple of names in the chat here.
What do we got here?
Spin doctors, millennial love money, platinum drip.
Get the platinum drip. Marquise. I like where your head's out there, brother.
Yeah.
There's a couple good ones there. There's a couple good ones, but no, I mean, I get it, Mark. There's ETF products for literally everything, but just because there's a product in the market doesn't mean you should touch it. And guys, when something doesn't trade options, there's a reason for that. We talk about spidey senses.
Mm-hmm.
Every one of your spidey senses should be up when a financial instrument in 2020 does not trade options on them.
Yeah, I agree with that. We do got to move on here, guys. Love the analysis on platinum, the ideas around that. We'll keep watching the metals market. Let's talk Bitcoin here for just a minute. Mark, obviously Monday morning here, we're getting a nice little pop out of Bitcoin over the weekend. Just kind of held that support point, Matt. It's up here as we're pushing towards that 20K mark, 19,240 right now. Let's start with Mark and There was an analyst, I believe, at JP Morgan, Mark, that had some interesting commentary around Bitcoin you wanted to bring up.
And I thought it was fascinating. You know, along this run up that we've had the last couple months, there's been several signals, right? Of there's some steam here. There's some good stuff. I mean, first of all, you had the Square news that they had 1% of their portfolio in Bitcoin, the PayPal adoption. You started hearing analysts come out with these really ridiculous price targets. You started seeing institutional individuals start to really talk about they're in. And I think today is another one of those steps in that. The analyst at JP Morgan came out and talked about Mass Mutual's $100 million investment in Bitcoin. And they had some really strong language on this in a positive, bullish way, in saying that Mass Mutual represents that next step, potentially going from family office investment boutiques and wealthy investors who have came out and said, I'm in, to the adoption by insurance companies and pension plans. And this is a huge potential step. I'll give you the analyst's exact quote. Mass Mutual's Bitcoin purchases represent another milestone in Bitcoin adoption by institutional investors. One can see the potential demand that could arise over the coming years as other insurance companies and pension funds follow Mass Mutual's example. And so once again, it's not like we have this widespread pensions and insurance rushing into it, but starting that ball rolling, it's obviously a huge potential source of demand. And remember, listen, at the end of the day, stocks don't always just go up. Everything doesn't go up. We have a supply balance equation that moves price, whatever the market is. One of the reasons stocks always go up in 2020 is there's been a ton of demand, right? This could be a huge source of demand for Bitcoin, providing price stability and huge potential demand size catalysts if this is coming through. And this is what JP Morgan's pointing to. It is yet another one of those moments in the last few months in the tsunami of positive adoption. And, you know, it's like we talk internally far more than we talk externally to our community about Bitcoin and where it's at, this and that. And this adoption theme is the first thing I have seen in 3 years, because I've been a traditional Bitcoin poo-pooer, like blah, 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 Bitcoin. Yeah, I don't have any interest. One of the reasons I've been kind of pro Bitcoin over the last 3-4 months is this adoption theme. You start to see it. It's the only thing that makes sense to my head as far as a true sustainable. Yeah, I'm a stock guy, right? You know, and so like, and so when I see mass adoption of anything, I don't care if it's uranium or agriculture chemicals or finance or whatever it is. When I see the people start being like, yeah, this is where I want to be, it definitely, I mean, we see this play out over the last 15 years. I'll see it play out the rest of my life. When you start to get a lot of people on the bandwagon, and when those people happen to be institutions, good things tend to happen in those areas. I mean, go look at the rotation of small caps. You know, institutions started piling on there, takes off.
Well, I mean, Mark, when you're talking about a mass adoption argument, you're talking something a little bit more traditional than some of the arguments on Bitcoin have been over the last decade. And so the mass adoption argument is one of those things that, honestly, Wall Street can understand. And because Wall Street can understand that, you can understand that. Yep. I can understand that, right? You know, we're traditional stock and traditional metal guys and so on and so forth. But you know, it's when the Bitcoin dudes and gals start getting into they're going to overtake the central bank and become the next reserve currency of the world, where everybody's just like, all right, go back to your uncle's house. Yeah. But you know, when you're talking about the mass adoption, I mean, you can start to see a path towards, you know, corporations adopting this, governments adopting technology. And so, you know, what happened with mass today is just similar to what we saw with PayPal and what we saw with Square and what was seen, you know, start to build literally at the banking system and whatnot over the course of the last couple of years here. And so obviously, anytime you're going to get news that furthers that mass adoption argument, which is, in my opinion, an argument I can get behind. Like
Mhm.
I have a hard time getting behind Bitcoin as a digital gold. You know how stupid I think that is? Like literally one of the dumbest arguments in the history of financial markets is Bitcoin's the new digital gold. It's not. They're completely separate. They're fighting on the exact same team. When you look at the mass adoption argument though, it's like, oh, now I can start wrapping my head around this, because now you're talking supply and demand, which is traditional economic analysis, and everybody that's around the market can really, they can get behind that argument because they can understand that argument. It's and quite frankly, Tim, I'll just give an analogy, but Tim, you and I, during this year when we were looking, for example, it's a branding problem is what it is. And the reason I say that, Tim, it's like you take that defund the police thing we saw this year,
Yeah.
and how silly of a marketing theme that defund the police was.
Mhm.
And Tim, you and I were talking about this and said, I think most people, if you were to talk to them one-on-one, would support police reform, education, programs like that. But when you put it into defund the police, everybody's just going to be like, are you stupid?
Yeah.
Like,
Words matter.
really?
Yeah.
Words matter.
Words
Words
matter.
matter. And so when you're looking at these themes play out here, and you're talking about Bitcoin is going to be the new currency, the number one currency, it's going to replace gold, it's going to replace 6,000 years of history on gold. A lot of traditionalists like Mark or myself were like, well, that's just silly.
It's just dumb.
That lacks all historical understanding in any capacity. That literally is one of the most ignorant, like that's what tradition, I'm not taking me, although that's something I have said, I'm saying that's what traditionalists will fight. But when traditionalists, i.e. Wall Street, stock market, commodity markets, when those traditionalists hear a mass adoption argument that is now centered around supply and demand, and you can now start painting a path of, oh my goodness, you got 100 million investment here, you got a 200 million, look at that demand start building, and it doesn't even matter what the supply is, demand outweighs that. That's why traditionalists like Mark can get behind it, because now they understand it a little bit, and now we're starting to see it happening with our very eyes today, last week, the week before. Now, you love what you're seeing here today, the response. I want to take a quick peek at a couple different timelines on Bitcoin, though, because I think they're important. Number one, the Alpha 9 pattern that we described coming into this 20,000K breakout with the momentum, riding Mark's girlfriend, the 9 EMA, consolidating right south of that 20K barrier, that pattern's over. That pattern was violated literally last Wednesday with the drop underneath that 9 EMA. Now you're looking at this as natural consolidation, neutrality in preparations for a breakout. And so when you're looking at that, you're micro analyzing it a little bit, and that's fine. You're going to do this when we're talking about all-time high type breakouts. But when you're looking at it, you love the news today. I want you to take a look at something though, guys, and I want to get your opinion on it. After that news was announced, you saw a gap up. Look at the intraday analysis on Bitcoin today, guys. A lot of things surprise me. Something as consistently as a consolidation between 19,400 and 19,100 that is that tight, that literally to the penny on resistance and support, something's happening, guys. What's your take on what's happening on the intraday perspective regarding Bitcoin following the news of mass today? Because guys, if you were going to tell me that you were going to have a tight range consolidation after a gap up of, what was that gap up? Like literally 1,000 points?
$1,000 gap.
So you gapped up 5%. You gapped up in a massive range between 18 and 20K in a very, very volatile area of the market. And this consolidates literally for hours.
That feels like a
What's
set of
going on?
buyers and holders that do not want to sell this thing at all and take profit on that. And Matt, it looks like you've got a nice trigger at 19.4.
That's a great day trading trigger.
A little bit of a day trade setup right there.
I think that's a great day trading trigger.
Yeah.
But my thought, and I want to see if you guys agree with it. people woke up today after that mass adoption argument we heard this morning, and they said, I don't want to sell.
Yeah, why would I sell? That's exactly right.
Well, I mean, you think about someone like me.
They might not be adding,
That's like, well,
but they don't want to sell.
Party's back on. Yeah,
Yeah,
why?
no,
I don't want to sell.
You
ahead,
think
Mark.
like someone like me who is new to the Bitcoin bandwagon. I hadn't reduced any of my exposure on the big dip. I added more on Thanksgiving. I hadn't reduced any, and I added more on the news. And I think I represent a lot of mindsets and how they're looking at it. They're like, I feel good. Like, I think people feel good. And when people feel good, things tend to go up.
Mm-hmm. Mm-hmm.
That's a nice setup, though.
You have to love the price action development if you're a bull, no question about it. I like the no sell kind of intraday here, Matt. Obviously, it's holding here, and if you're a Bitcoin bull, there is a trigger there that could be a day tradable up to that 20K mark. But really, I mean, the ultimate thing that we're looking at, isn't it the breakout though? The most exciting thing that any Bitcoin player is looking at right now. You got to love the price action. You got to love the intraday price action. But guys, we are now pushing back towards this all-time high in this larger consolidation. I think the bulls are got to be happy and excited at this point for sure. And by the way, the mass adoption argument has really started to kick in the last 3 months. I mean, think about it. Square,
It has been
PayPal,
huge, massive.
institutions,
Yeah.
institutions on Wall Street, all of it. I mean, that's been a big part of this trend here. So yeah, definitely a healthy day on Bitcoin. Any last thoughts on Bitcoin here, guys? I do want to talk a few stocks as well.
No, I think, yeah, find a way to play Bitcoin.
Yeah, I love the analysis. I think that there's definitely something in here for potential in that regard. All right, guys, let's talk companies here today. There's several in the news I do want to get to. One of the other themes that was for in this morning's news, a lot of it was the merger and acquisition stuff that we did see. I did see a couple of companies, Alexion, I believe, Mark, AstraZeneca, who's on that vaccine development front. We've seen them in the news so much. They actually used $39 billion to buy Alexion. Now, AstraZeneca is down on the news. Alexion is obviously up on the news. Very healthy. That's what happens when you have that kind of acquisition. It's the biggest on record for the company itself, Mark. Huge in regard for that individual company. And then I saw some other ones. I saw GlaxoSmithKline reported to be in the race for some therapeutics company, EIDX, at about $120 a share. Other educational software, Pluralsight, made a deal for $3.5 billion to Vista Equity, I believe. Guys, these merger and acquisition type
Monday,
news
baby.
stories. Yeah. I mean, what does it
Merger
mean?
Monday.
Isn't that just part of the bullish theme here, Matt?
Yeah, it's bullish. You don't got any like big names today. Like, does anybody really care that EA is acquiring Codemasters for 1.2 billion?
No.
Okay. Does anybody know who Codemasters is?
Don't know what to do. Trust EA
Okay.
though. So
Well, I trust Activision more than EA, but I get the point.
Yeah.
Point is, like, there's not there's no Google's merging with this,
No.
right? But you have a flurry of them, right? You have a flurry of these mergers and acquisitions, and I mean, we're gonna have something to say about that so-called hot. The my God, is there anything more annoying than how aggressively Wall Street tries to make the hot IPO market hotter?
Well, they're selling product there, brother.
Well, I know what they're selling. I know what they're selling. You know what they're selling. They're selling dreams and dragons. We get it. But the reality is it's annoying, right?
Yeah.
Hot IPO market. Not one person that bought that IPO has made money. Literally not one. Only venture capitalists made money.
Yeah, the IPO market, by the way.
The hot IPO market that you guys are all holding the bags. Come on, get out of here with that. But no, I mean, when you see that type of thirst, right, for IPOs, and when you see that type of thirst for mergers and acquisitions, right, when you see that level of thirst, that is obviously a bullish indicator, because when there's a reason Airbnb waited till now to release their IPO. There's a reason DoorDash did that. They could have easily done that earlier this year. Airbnb could have done it in 2018, could have done it in 2019. It wasn't the right time. And that's what you got to think about, guys, is these decisions these corporate individuals make on the release of their IPO. There's a reason Airbnb didn't release earlier this year, because they would have been a $7 billion company. Now they're a $90 billion company. There's a reason DoorDash didn't do it earlier this year. And so that timing is because you're starting to see people wanting to take advantage of things that are happening from a price perspective or an economic perspective or a business perspective. They're looking at expanding their business. And so what you take away from that, the flurry of mergers and acquisitions and the relatively hot IPO, I'm just going to tell the hot pre-IPO market. But in terms of that, what you take away from that is these individuals making those decisions aren't worried as much about the future of the market as, say, hypothetically, you or I am. And so that gives you a little bit of a more bullish theme that is developing. It doesn't mean price just goes up. It means they're more confident. They're more confident about the market and the economy 6 months from now, a year from now, than they otherwise would have been before they made this type of deal or made this type of announcement or, release their IPO. And so it's just a timing factor and understanding how business individuals don't make decisions for the now and here, but they're making those decisions for the future. And so, yes, it does feed into the bullish theme.
The hot IPO markets, though, obviously we got to remind people out there. We've talked about this as these things are coming out. They get exciting, all those type of things. But how would you feel if you bought the tick up here, guys, on the high of that Airbnb day? I mean, you're already down 25% in 2 days. It's and I know this is the frothy nature of when the news comes out. People get all fired up about it. The news media starts pump. But man, we are seeing some selling here.
I mean, there are times, and we were talking about this before the show. There is a real distinction, and it's lost on some new traders, between trading, investing, and pure gambling. And I don't know if there is a better example that you'll find, and you've had a lot of them in 2020, than what you saw with DoorDash and Airbnb, where they were priced. DoorDash was priced at like 90, 95 bucks. Airbnb was like 60 bucks.
Oh,
and
another 2 days, you're going to get that price,
and then because of the insanity of 2020, and this frothy, everything is awesome. And because they were brand names like, DoorDash, Airbnb, you don't have to be in the stock market to recognize those brand names. You had this ridiculous opening day gap up from where the initial pricing was. I mean, just the prototypical, this is gambling. Hey, sometimes gambling pays off, but you're not going to succeed in the next 10, 15, 20 years. Like, there will be a couple people out there, right, that just put all their money on out of the money options, hit it right, and made millions of dollars. The rest of us, we're not going to succeed entering the realm of gambling. We look for high probability situations. We take advantage of them. We rinse and repeat. We rinse and repeat. We rinse and repeat. And one day we get our financial goal down the road. Let's not gamble.
There is so much that this DoorDash and Airbnb remind me of that nonsense that was happening with Uber and Lyft. And it was called out at the time. I remember I stopped following Jim Cramer because of that nonsense with Lyft. But it just feels like a pump and dump scheme right now. And I think touching IPOs at this point is literally, I don't even think it's gambling, because I don't think you have an edge.
Yeah, no, and Roblox and IPO, I think we're all looking forward to. They got pushed back, I think, till next year.
I'm looking at it 6 months after the IPO.
Yeah, they pushed.
That's interesting, because the rumor was Friday, and then they pulled that rumor, and then they said this month. So they're talking next year.
Oh,
That's really interesting.
My daughter's going to be upset. She knows Roblox is going in her college fund.
Listen, give it.
She's going to be very upset. Like, we talked about this literally 2 days ago. She's
going to have to wait a few more weeks.
She's going to have to wait a few more weeks.
Yeah. It's obviously noteworthy here on the Airbnb and Dash, kind of price action here the first few days. By the way, Matt, they also caught downgrades here very early in this process, basically saying, I love the analyst note on Dash. There's very little room for any performance hiccups at the current valuation. Yeah, because they're the pricing was crazy.
Well, yeah.
So
Okay.
yeah.
Okay. Think about that. And what that individual said, Tim, is
Mhm,
100% accurate. Think about it.
mhm.
At what point, like, what further could you do?
Yeah.
Like, like, what could your proper expectations be when you're buying an IPO that was priced at like 90 that came in at 150? What, like, where do you think it's gonna go? Like,
Yeah.
what is that reasonable expectation? Is it reasonable to expect Airbnb in a day to literally overtake, say, Facebook?
It's not a reasonable assumption. I think people are just
Like,
frothing at the
oh,
idea.
well, that's
Yeah.
fine, but
They're
I'm
just
dead
getting pulled in.
serious.
Yeah.
How big of a company do you think a company should be that is a debt-driven company that does not have that is not profitable right now? How big on the IPO do they need to be? I mean, do they need to IPO bigger than McDonald's? McDonald's has only been around for 100 years. Like, why can't we just do this in like one day?
I saw a graph on in some news media outlets last week, Matt. Basically, it said, here's why Airbnb is bigger than all the U.S. hotel chains combined.
Here's why you should never listen to them and just come to tackle trading to get a level of sanity in your analysis on a daily basis, because that's batshit crazy.
It is.
It just is. I
it's
mean,
just-
it's just, listen, and it's not that there won't be an opportunity to trade Airbnb at some point.
No,
It's just,
I look
you know,
forward to, Mark. This needs to be said. I look forward to buying from the back holders, and I'm just going to end the statement at that.
Yeah. Yep. They will capitulate at some point. The cycle will repeat itself. It's obvious what's happening here. Obviously, something I wanted to talk about here today, just because of the price performance first few days, and I can't count the number of times Matt and Mark have talked about this phenomenon. And Matt, how many times you say, wait for 6 months, wait for 3 months, wait for data, just wait for data, wait for enough data to where you can get a discernible pattern, whatever that amount of information is. The chart will let you know when it's there, and you don't need to just be rushing out and smashing a buy button all the time on emotion.
If there was one movie scene I could ever have people watch just to realize there is a timing element to this, it is the opening scene of Gladiator, when Maximus is saying, hold, 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 and then you unleash. Patience is a position. Timing is important. Yeah, a lot of what we do in the market is waiting. Why do you think we come up with these random crazy ideas? Because we have a lot of time on our hands to think about it.
Well, even if it's a short wait, like a Bitcoin breakout, you've been waiting now for what, a month, right? But even that, you've got to be patient. Week and a half, yeah, whatever it is though. But even if it's a wait, you've got to be patient. You got to let the actual thing come in here.
Listen, how many times has Coach Frank ever said, "I don't care when it breaks out. I'm just going to be there when it breaks out"?
That's right. That's right. That's right.
Like I said on Bitcoin, even a week ago, last week, 2 weeks ago, let it consolidate for a month. Are you kidding me? Like, let it consolidate for 2 months, 3 months. Who cares? Because think about it. Look at that weekly chart for a second, Tim. Take a look at that weekly chart. You give me some more tight consolidation over the next 2 weeks. Oh man, tell me there will be a better breakout on multiple time frame analysis than that one.
I doubt there will be. A couple other company news news items I did want to get through here today. One very, popular trading company in that regard has been Virgin Galactic, Marky. I mean, they've been waiting for a long time to start to actually get some of these airplanes, ships, in the air, starting to move, starting to show investors and the public that their product is going to start running in 2021. Mark, I believe it was 22 months since they tried a launch, and they actually had a highly anticipated one over the weekend go wrong, and they did botch it. I believe that they had some kind of test engine failure, whatever it was. I'm not a NASA scientist.
You're not a rocket scientist.
No, I am literally not a rocket scientist. But I do know this: a company that doesn't make any money, Mark, that has to get their product out there, they couldn't have this here today. I mean, what do you do with the stock now?
Well, this is one of my favorite companies to follow. It's on my 100. It's been on my 100 for a year now. Listen, I know how I play Virgin Galactic. It is a very simple thing. When I can get a chance to sell naked puts at $12, $13, $14. Those have been good opportunities because the company doesn't make any money, but it is the only pure play space travel. It's a fun company to trade, but that's about it. And like, listen, I think you're going to revisit that support level sooner than later on this news because it's a big deal. Company for people to have a pathway, for people to get excited about a company, and you've seen this with Beyond Meat, and I could give you a lot of other examples. There's got to be new news to keep the froth, to keep the belief, to keep the hope going. And so Beyond Meat is a master. Hey, we're now in Walmart with this, and we're in this with this, and there's always that. When you have news like this, it's like, where's the pathway to profitability theoretically? Not even practically, because I don't know what Beyond Meats is, but like theoretically. And when you have an event like this, it's a massive momentum killer, a massive momentum killer. So I wouldn't be surprised if we see those mid-teens sooner than later on this, because I mean, it just kills the dream right now.
Growth stocks that are priced for future revenue when they don't currently make revenue, having bad news headlines about their core product is not going to be good for the momentum on the stock. Down
Space,
17%
Virgin
today.
Galactic, Nikola, these companies, when you've had these situations where there's zero revenue companies.
Hey, hold on. Can we not put Virgin into the same sentence as Nikola?
Well, I'm just using zero revenue companies. So when there's bad news that occurs, the stocks get hammered, and they get hammered hard. Hey, Nikola was on our bear report and bringing it up. Nice little breakdown out of a support level, hitting right now. So,
on which one?
Nikola's down. It's testing a breakdown. It's kind of one of those stocks. Mark, want to reference it. It was also on the bear report over the weekend, I believe.
2 weeks ago.
But 2 weeks ago.
Okay. Which ones happens first? Everybody at Tackle Trading, which one happens first? Nikola actually sells a real vehicle.
I love this
question. Or Space actually has a consumer flight to the International Space Station.
So which one happens first? Nikola actually sells one of their trucks.
I love 2020.
I think it's a legit.
It's an awesome.
I love 2020.
I think it's a legit question.
Or we actually have a flight.
I'm locked in.
There are scenarios where Nikola never sells a vehicle. You have to think about that.
Are there scenarios where Space never has a flight?
No.
Probably not. They'll eventually get that flight up there, right? They've already booked like a bunch of tickets.
I won't be on it, but I think they're going to do the flight.
Yeah.
Which one?
Man, I'm going to take Space. I'm locked in for Space. What about you, Tackle Trading, Team Tackle? Which one happens first? Virgin Galactic actually has a flight with real humans in it that paid to be there, not their test flight, or Nikola actually sells one of their automobiles.
I'm taking Space.
Yeah.
I'm taking Space.
Is the Nikola chart as symbolic of 2020 as anything?
SPAC merger, hype off, no actual revenue momentum.
Okay. Yep. SPAC merger, which means it's got the 2020 SPAC nonsense all over it, right?
Mm-hmm. Yeah.
You have a hype train with no revenue that will obviously, take over the world by 2022. So there's that. So you got the radical crazy element there. Massive volatility, which really, really does track the psychological nature of all of us in 2020. So yeah, I would say Nikola. Oh, no. I can't say what I was just about to say. That lacks comment.
Hey, well, listen, you buy that ticket $93.99.
All I'm saying is I'm taking Space.
I'm going to say Nikola. Listen, I've researched Nikola a little bit. I'm going to say Nikola. I'm saying they're going to sell something first. Well, I don't know if it's going to be a car.
Okay, wait. You said, hold on. You said something. Like, did you see how
one of their?
Mark,
I do.
Tim, he tried to win this game, which was just a fairy tale made up game, literally by using one word that in 2
Listen,
years
I like
from now,
winning them all.
you
Listen,
can
I
say
don't care
he
what the
won.
game is. I got my little tricks.
Listen, for Team Tackle, if you ever wanted to understand the psychological nature of Coach Mark, in the last 30 seconds, you got everything you needed to hyper analyze.
I like to win. I do.
No, Mark, it's got to be one of their cars. You're locked in on Nicola. I will.
I am.
remind
I'll
you
go
that.
Nicole. Listen, I think it's hard. Like, listen, the space thing, I think is harder. I think that's I mean, I can't imagine the level of, like, first of all, the technology, right? Obviously, they're a little behind on the technology now, but man, I mean, that is going to be a really tough road of hurdles to get in.
Mhm.
I say we short under 16 and target 10.
I agree with that analysis as well. Nicola's been a dog, and it is on the report again this week.
I
2 weeks back to back.
like that weekly chart though.
The breakdown
I liked the 16 breakdown.
Yeah,
I liked the $10. I wasn't kidding. I like the $16 breakdown.
Yeah,
no, because Nicola's one of my 100 stocks I follow,
and I do like $10.
And when I saw, I was like, oh, it's in the 16s. I was like, that's new.
Mark, it is my life goal to get your top 100 to actually look like a normal human being.
Oh, dude, there is nothing. I think Apple's on it. I mean, I got like 3 uranium companies now. Like, I got 3.
Dude, nobody needs 3 uranium companies. Like,
uranium
that's
is
just
a good little run, dude.
I know. One's good though, bro. Like,
a couple other quick news items that I had, guys. One of them was, the plot out of a movie, by the way. SolarWinds Corporation, now the second company in a week that has been hacked by some outside government institution. FireEye last week, Matt, we gave the news. We talked about it, FEYE. That stock went down on the news. That was last Wednesday. SWI over the weekend, they even had a quote come out. The U.S. government is aware of these reports. We're taking all necessary steps to identify and remedy any possible issues related to this situation. They're calling this cyber espionage campaign, Matt. They believe the Russians are involved. That's from the government directly, by the way. Sources from Reuters and whatnot, they're painting a pretty scary picture in this regard, Matt, on this hack. Is there any market relevant news on this, or is this more just interesting if you're a stock guy?
No, I didn't catch this news. What was it?
Multiple federal government agencies, including the Treasury and the Commerce Department, have had their networks breached as a part of a global cyber espionage campaign believed to be the work of the Russian government.
So SolarWinds, like,
and this was the software that got breached and hacked that was very commonly used. It's a management software, I believe.
All right, so SolarWinds is a software company. Who is SolarWinds?
This is a company that had the software in those institutions that run.
So this is so it was their software
that got hacked.
Okay.
Is there market related news on this? There's a reason I'm bringing it up like last here in the show. I don't think there is. I think it's interesting and noteworthy news of what is happening with our government right there. Obviously, there's a lot more hacks than I think people realize, but this one sounds like the plot to a movie to me. Matt, Mark, any market implication here?
I heard CIA, Iran-Contra, 24, and Alias wrapped up into one. I'm good.
All right. Yeah, that's kind of what I heard when I read the news as well. It feels like exactly any of those movies and whatnot. The last one I had, I thought this was really interesting as well. You know, Matt.
Mark, I got a question for Mark.
Oh, sure.
Mark, on naked put on space with the gap down, like I'm looking at 24 on space as a deeper pullback where you're looking at that 50-day moving average on a bounce from a position perspective. But if you're looking at taking advantage of the dip and this is something you wanted to do, you're the naked put expert. 24 seems a little aggressive to me for that type of.
All right, so here's how I played this pattern.
Like, are you looking like just question mark? I'm looking at 32 days and I'm looking at the 20 strike with the 14 delta. Or perhaps the 22 strike.
The only thing I trust is the 16, and like, listen, the
so
first thing
you think that's even too aggressive? You want to
listen. Yeah, the only thing I trust on space is that gigantic freaking floor that's formed all year long in that 15 range. I like the 16. I didn't sell one today.
How about 17 and a half?
Yeah, it's fair enough. fair
Okay,
enough. Yeah, I
and,
mean,
and let me make my argument at 17 and a half, because I agree now that I've thought about 2022 is probably a little too aggressive for that. 17 and a half puts you right north of that minor pivot before the run up right now.
mhm.
So post-election analysis, that pivot. So if you go to like November 5th, Tim,
Mhm.
so you got that pivot on November 5th. Like, nope. Yep.
This one
You're
here.
that's like 17 and like 1775, 1730. So you're right into that range. You're above that double bottom at 16, where if you do get put at 17 and a half, you love the support range at 16, and 15's got a ton. So I'd say
Lots of
16 or
support down
17 and a
here.
half there.
Yeah.
Yeah, I mean, and
Yeah.
because one of the first things I do is I'm like, who are the companies I follow? Who's down big? Who's the big red? And obviously the space thing. And you anticipated it. I'm waiting a day or two before selling that put. You can talk me to 1750 easy. I just think there might be some follow through on this news. Like the one thing in following, because this is what I do. I follow these volatility things a lot of times. Like pull up LZR. Like in 2020 on some of these hotter companies, you'll have big move down and then they'll move back up. Like Laser was down like 8% today, but it's getting bought up. You're not seeing the buy up on Virgin Galactic.
So you want to see some demand come in, even if it's just one day.
Yeah, you're not seeing the buy up. You saw some in that first half hour, and it just slid then to daily lows. So I'm not seeing any follow through, and this is what helps determine whether I sell one or not today or tomorrow or Wednesday.
Yeah.
No follow through today on the intraday chart at all. Very uncommon for these culty type stocks. So I think there's some more sliding to go, and then I'll get a bigger credit at the same strike price.
I think you can approach this one or two ways with this type of dip mechanic. One, you could be aggressive targeting that 24 level.
Mhm.
And again, that would be very aggressive, right? Targeting that 24 level. And that would be literally like, am I willing to take possession? That is, I really
You probably will
to take possession, right? So you got that aggressive mentality right there north of 24. I could see that. And again, that is with the intention saying, I want to take possession of 24. And literally you're looking at boomeranging, right? At that point. Or some deeper value where you're like saying, I'm okay if I take possession because I'm willing to own it longer term, right? But most likely I just want to cash flow, and that's when you're talking about the 16 or the 17 and a half. The premium is really juicy at 24. Like it's really juicy there, and that's going to entice people. But again, only if you want to take possession there.
I don't like the 24 play at all.
Well, you really just never want it, but quite frankly, you don't want to take possession though. You're fine just doing the cash flow.
Yeah, I'm fine.
Right?
Yeah.
So either way, it's fine.
Virgin Galactic is what I call a math play.
Mm-hmm.
It is. I think I can trade this through naked puts and cost average down, but I don't really believe in the company. So
Yeah, but here's the thing, though. I mean, the amount of premium down there, it might just be a math play. You've got so much support down here. I kind of like, there's a couple of different ways you can play this. So
to make the decision, guys, I'd have to research it on the spreadsheet and track ATR distance and all of that. I'm just saying, if there's two ways to play, you do have an aggressive approach at 24 with a desire to take possession to boomerang. For those that just want to cash flow, that want to take advantage of the dip, but believe in the company. I mean, there's some deeper mechanics where there's not a lot of probability that you're ever going to take possession there.
No, so I think the reason I'm not doing the 1750 or 16 today is I just think there could be some follow through tomorrow that creates a bigger credit. So
So you're just thinking maybe you can get a little bit more premium by waiting.
I do not like the fact that it did not buy up today on the dip at all.
I'm with him on that one. Even if it was dojian today, Mark, I'd be like, you could easily make an argument. Demand's offsetting supply there, finding support, but with it testing up and getting beat back down and towards the lows of the day, you got to think, price depreciation is still kind of ruling theme right now on space. Give it a day. Maybe if it dojis tomorrow, then you can start doing a little bit more. I do think a day to see how the market responds based on what is happening today is probably the right approach.
Love the discussion, guys. I think it's really cool. All right, guys, let's get the last news item. Then I got some stock picks I wanted to go, and we're at the end of the show here. We're going to be wrapping up here shortly, so I'm going to kind of put my foot on the gas here just a little bit. Matt, here's a story that we're all going to hear a lot for a very long time, and for the next 20 years probably. Some ESG headline coming into a company's, whether it's with their decision making, their strategic alignment, M&A activity, just whatever it might be, or even just product. Unilever, one of the biggest packaged goods companies, consumer packaged goods companies in the world, they came out and said, Mark, that this year they're going to allow their investors and their shareholders to vote on a non-binding company plan and an agreement at their annual meeting over their environmental policy, specifically talking about their environmental policy, trying to be zero emissions by 2039. They want to make sure everybody who invests in Unilever is on the same page long-term, reaching out to their investors. I find it interesting, just kind of another note about the ESG thing that's happening right now. It's not going to go away, guys. No question about it.
Well, and just one thing to say on that, we spent quite a bit of time talking about the mass adoption argument of Bitcoin here today and how Wall Street can really kind of understand, and really more than anything, guys, the mass adoption, it's not that there's not other arguments for Bitcoin. It's the one that Wall Street understands the most because it fits within their language. But when you talk about mass adoption, I mean, there's nothing right now in our entire world that is being more adopted more aggressively by Wall Street and corporations right now than ESG. And it wasn't Larry Fink in January of 2020. It's been going on for years now, but it is now a dominant theme in the market. And it is a dominant theme in the market, not just for this year, not just for last year, not just for next year. It's going to be a dominant theme in the market for the next 20 years.
Yeah, I agree. And I really believe there's going to be a lot of great opportunities around companies that catch the favor of investors and whatnot around ESG. So plant it in your brains. It's going to stay.
Honestly, if you do not have ESG components in your portfolio, you need to reevaluate the situation.
I agree. And then the last thing I want to do here today, guys, was talk a little bit about some of the picks from last weekend's scouting reports, obviously the option report and the stock report. Matt, you've been doing this fun thing in our new Facebook group, which everybody should join. If you guys have Facebook, we've got a Facebook group for tackle trading users where during the meeting, you actually ask the coaches, out of all the discussion we just had, what are your favorite picks? And the coaches all give you one and why they did, and you kind of posted it. I'll start with mine from the weekend. Sony is one that I am very, very much excited about here. And I like the cleanliness of the breakout up on the top. This was an option report pick. We still have this consolidation up here that is developing. Red candle at resistance on a Monday. Doesn't change my analysis for the entry or the breakout here. Need to get confirmation, but I love that breakout potential. Tyler mentioned American Express, and he liked the pullback developing. It's still in pullback development. Obviously, red candle today blows that pattern up a little bit. Go ahead, Matt.
Yeah, you can't really start with we're still in pullback mechanics when it's a bearish engulfing candle that just violated the 20-day moving average. That trade's over.
Does this one blow it up for you?
It never confirmed. It just didn't trigger, and an aggressive trigger happened, but aggressive triggers have not been the cup of flavor. So, to me, no, that American Express, it was a good pick coming in. You like the setup coming in at a pretty consistent 30-minute chart. Got blown up on the price action here today when the market gapped up on the futures market and then got beat up on overall. So I don't think you're looking at American Express anymore and saying, you know what, let's look at, dip mechanics. No, that pattern's destroyed and you got to move on to something else.
Move on with something else. I believe.
No, well, it's also important to say when you recognize that, don't chase it. It's over.
Yeah. Absolutely.
It doesn't matter if you stare at it. The very reason why you like the trade coming into the week is now completely over. Full stop. Shouldn't be looked at the rest of the week.
And that's part of short-term watch list management, guys. If you never remove anything ever, your watch list is going to end up with 400 stocks on it, and you're not going to be organized.
And go to a 5-minute chart. I think this is, I teach this when I teach, and it's talk about entries. I never enter in the first 25 minutes of trading. I like, and sometimes I miss out, but sometimes I get saved. I had AXP on a trade watch list today. You gap up, but then after you get done with that initial volatility, save me the trade. Waiting a few minutes for the market to open, save me a trade today.
Yeah,
Save me a
within
trade
10
today.
minutes, the
And
setup got blown up, and then when you broke support here, now it's done. Yeah,
yeah,
if you look at
and
this here on
so
the
like
intraday.
just being patient, and I mean, because I know it too. I mean, especially when you're in a frothy bull market, people are like, I got to get in right now, or I'm gonna, like this is why we have rules, right? This is why we have rules. This is why we get educated. And if you want, like, we have so many things to educate on and tackle trading. Go to the store tab, sign up for a 15-day free
Listen,
trial today. So
yeah, listen, trades happen. Trades set up. Some missed, some hit. That one got blown up. Move on. We should literally move on.
Absolutely. All right. And then Mark, one that you had, and I'm looking at my notes here from last weekend, you thought were exciting. Your favorite pick was Raytheon in the industrial sector, I believe. And you were looking at this
same
daily setup.
situation. You saw this in finance and industrials today. I do like a breakout of Raytheon a lot. We didn't even get a trigger there today all over that resistance level. But you saw the same price action on industrials and finance slide in that first half hour, slide throughout the day. I'm now looking at deeper pullbacks, but for swing traders, it makes it very problematic.
The ON setup was Gino's favorite. Actually did confirm here on a little doji red candle here today, holding the 9. And then Matt, one of your favorites was Wynn, WYNN, and you love the potential for a breakout here coming into the week.
Yeah, I liked a quick hitter here, and nothing aggressive, but I did like the cleanliness of the breakout channel there on Win right north of 113.50. I like the intraday breakout, and, with a lot of what happened today, just a little fade action. Unlike what happened on American Express, though, when you're looking at breakouts, it's a little bit of a different cup of tea than when you're looking at retracements or flag patterns. When you're looking at breakouts, let it consolidate. It can come underneath that 9 EMA. Not a big deal. We're looking at the breakout here. Nothing here today changed that. And so who cares? We're still looking at the breakout here, and I still like it. I still like a breakout above 113, 113.50, call it 113.60. There's not a lot until you get into the 120 range there. So I do like a quick hitter above 113.60. If you want to call it 114 to get the top end, that's fine too. A little quick hitter to 120 makes sense on a breakout.
Well, and this is one thing I love about breakouts is that even if they're hesitating at resistance, the trigger is still the trigger up here, right? So if and when you do catch it, you can still play it. So yeah, I do like that one up there as well. Looks like it's got potential for a little swing setup if you get confirmation. And by the way, guys, we do all those weekend reports each and every weekend. There's usually 15, 16, stocks on those lists, 10, 12 sometimes, bulls and bears that we have on that. If you're a pro member of Tackle Trading, you're already aware of the reports. I would always start your weekend going through the newsletter, doing your weekly prep, attending Mark's Sunday night show where he goes through all the markets, kind of prepping for the week. And those reports definitely update your watch list, get ready for the week as well. Guys, let's start getting final thoughts here today on a Monday to start our trading week. Markets, we kind of broke down all the analysis and the action here. Matt, any final thoughts for the team out there?
Just a little bit of a hesitation day in the marketplace. It's going to be an interesting week. That's always the case in the market. I'm looking forward to, navigating this, the retracements and seeing how the market's going to find support on the NASDAQ and the S&P 500. And, the two charts to kind of take a look at on the breakouts would be the Dow Jones and the Russell 2000. A nice little close above 30,300 would absolutely be considered a breakout here. You have it as an ascending triangle. It kissed off that level on the high price here today. So you're still looking at the Dow, the industrial play, saying, hey, when are we going to break out? But when it does, you're going to be looking at that day. So keep an eye on the Dow Jones. Keep an eye on that. The Caterpillar chart, the Honeywell chart, the IG chart we talked about last week. These plays are still setting up, still look really, really, really frothy. broccoli. When you're looking at the Russell 2000, that has been the strength of the market. I'm still looking at that here today, seeing if the Russell 2000 can continue to show relative strength against the market. Tried to fight on a breakout of a high base here today, like most of the market fading back down. So we don't have confirmation here today. You kind of wake up on a Monday morning, getting ready for the market. You want it to start running so you can have a great week trading. But the market gives you what it wants to give you, and it's just a matter if you're around when it does. So, we'll be with you all week long for these breakouts and for these confirmation, and obviously help you guys navigate the market on a weekly basis. I'm getting excited to listen to see you and Tyler in that podcast here today.
Yeah, we're going to talk to Tyler about the podcast. By the way, if you're out there, it's a good reminder, Matt. Go read the newsletter. We published it on Friday, and it's just a fantastic job. Tyler always does a really good job. I thought it was great again, and I'm excited to talk to him. We invited Tyler on the podcast to discuss, how to build an investment portfolio. So you can kind of read the newsletter, get that prep, kind of understand what our conversation is going to be. Then when we release the podcast later tonight, definitely download it and listen to that as well. It's always great to talk to Tyler. It's always great to have conversations about investment, speculation, what role they fit in your own education, what you want to do with your retirement accounts versus your trading accounts, so on and so forth. So some important big picture questions that we're going to tackle today with Coach Tyler on the podcast. Marky, final thoughts from you.
So what are we talking about on the podcast today?
How to build an investment portfolio with Coach Tyler. Yeah. I'm glad you.
It's going to be a great topic. It's my favorite. Speaking of investment portfolio, it is my final thought. Listen, this is for me, and I've been saying this for a month on our Sunday night class. I love the cash flow elements of this environment. I don't know what can send it higher, but I got so many technical support levels, and I got no bearish theme. And I like a diversified approach to the market, a little bit here, a little bit there. That has been working everywhere. That's how I like. So talking about an investment portfolio on the podcast has been first and fourth front on my mind lately anyways. It's going to be a really good podcast.
Well, and one last reminder as well, we've had a promotion going on for a couple of weeks here at Tackle Trading. It's the last day of that promotion where our annual pro and our step system are on for a bundled price at $1,497. If you've been with us for the last 2-3 weeks, you've heard us talk about this. We've had discussions about it in events and whatnot. It's been in our emails, our communication. So if you're still waiting to make a decision, and you're looking at the step system, you want to enroll, step system 50% off right now, $747. Our annual is on a discount, $897. This specific offer, and I'm sure we're going to be doing some holiday specials and whatnot.
Yeah, Tim, and I just wanted to say that very quickly.
Yeah.
We will be doing something for the New Year's at Tackle Trading for our annual pro member subscription. We know our pro member community likes to lock that in, so we will do something at the first year. But for this specific offer of the step system and the annual pro, this is specifically for that day.
Yep. For this offer, absolutely. And then we are looking forward to some holiday stuff that we're going to be announcing, guys. We're doing some planning right now around that. And we know you guys get excited with those sales when they do come out. So, all right, guys, that is it here for Monday, 12/14/2020. If you're tackle trading, we love you. If you're not, join us. Come and be a part of what we're doing. First step, subscribe, click the bell. Second step, get a pro membership and put your butt in the seat and come back on a daily basis. We're out. We'll see everybody tomorrow. Same time, same station. Have a